Welcome to the Bullion Signal podcast. We're the channel dedicated to helping you understand the complex world of macroeconomics and precious metals so you can protect and grow your wealth. I'm your host, and today we are tackling a subject that is rapidly moving from the financial pages to the front pages: silver. But we're not just talking about price charts today. We're going to explore how silver has been transformed almost overnight from a simple industrial commodity into a potent strategic weapon in a global economic chess match. What's unfolding right now is creating what I call a geopolitical price lock, a fundamental shift that could permanently alter the value and, more importantly, the availability of silver for everyone. If you find this analysis valuable, make sure you hit that subscribe button and turn on notifications so you don't miss our future deep dives. So let's just start with a fundamental question, one that I believe turns the entire traditional investment thesis for silver completely on its head. For decades, the conversation has always been, what's the price of silver going to be? We look at charts, we analyze trends, we debate whether it's going to $20, $50, or $100 an ounce. But what if that's become the wrong question? What if the real question, the one that industries and even nations are now being forced to ask, is simply, can we even get it? Because in a world of scarcity, the price becomes secondary to the simple fact of possession.
And this brings us to a critical number that really frames our entire discussion today: 117 million ounces. That is the projected supply deficit for silver for this year alone. Now, let's be very clear about what a deficit means. It means that the entire world, all of our industries, all of our investors, everyone, is set to consume 117 million more ounces of silver than all the mines on planet Earth will produce and all the recycling will provide. This isn't just a rounding error. It's a massive, gaping hole in the global supply chain. And as you're about to see, this isn't a new problem. It's a chronic condition that's about to become acute.
So here's how we're going to break this down today. First, we'll look at why the silver market was already on the brink, a pre-existing condition of deep structural imbalance. Then, we'll examine the specific geopolitical trigger that has acted as a massive accelerant. We'll identify the world's silver gatekeepers and explain why one nation holds a frightening amount of control. After that, we'll connect the dots to show why an inevitable price lock is forming. And finally, and most importantly, we'll talk about a framework for thinking about your own physical metal shield in this new environment. Okay, let's dive into the first piece of this puzzle. To really understand the shock that's hitting the market now, you first have to appreciate just how fragile it already was. This isn't a story about a healthy market that suddenly caught a cold. This is a story about a market with a severe, chronic illness that just walked into a geopolitical hurricane. The foundations were already cracked long before this storm hit. Let's put some context around that 117 million ounce deficit I mentioned. This isn't a fluke. It's not a one-off bad year for mining output. For 5 consecutive years, the world has been in a structural silver deficit. Every single year for half a decade, global demand has outstripped every ounce of new supply. Think about that in terms of your own finances. It's like spending more money than you earn year after year after year. At first, you can cover the difference with your savings, but eventually, you run out of savings. And that's exactly what's been happening on a global scale. So you might be asking, if we're using more than we produce, where has all this extra silver been coming from? Well, this quote really sums it up perfectly. We've been raiding the world's pantry. The deficits have been met by drawing down the visible above-ground stockpiles. These are the massive silver inventories held in vaults for exchanges like the COMEX in New York and the London Bullion Market Association, or LBMA. They act as the buffer, the strategic reserve for the entire global market, but we've been draining them at a pace that is frankly completely and utterly unsustainable. That buffer is getting thinner and thinner every single day. All right, so you have this market that's already fundamentally unbalanced, living on borrowed time by draining its reserves. Now let's introduce the trigger. Let's look at the 1-2 punch of geopolitical actions that took this chronic condition and turned it into a full-blown acute crisis. This is where the game completely changed. What you're seeing here is a hypothetical but very plausible timeline of how quickly things are projected to escalate. It's a rapid-fire sequence of events. In November 2025, the United States officially designates silver as a critical mineral. The very next month, China responds by announcing formal export controls on refined silver. And then on January 1st, 2026, those controls go live. The speed here is what's so stunning. We're talking about a permanent alteration of the global silver market taking place in the span of just a few weeks. This isn't a slow-moving trend anymore. It's a series of policy bombshells. So what does it actually mean when the U.S. government labels something a critical mineral? Well, the definition is right there, and it's chilling. It means, number one, it's absolutely essential to our economic and national security.
We can't build our military hardware, our green energy grid, or our tech infrastructure without it. And number two, its supply chain is at high risk of disruption. This isn't just an economic statement, it's a national security declaration. It's the government officially admitting its own profound vulnerability and signaling to the world that it sees the supply of silver as a strategic weakness.
And China's response, in this scenario, is not a surprise. It's a calculated strategic countermove. In response to the U.S. signaling its vulnerability, China announces a formal state-level policy to control their exports. This isn't a rumor or a threat. It's a new system of export licenses and quotas. It essentially installs a government-controlled tap on the silver flowing out of their country, giving them the power to decide who gets it, how much they get, and at what price. And you can be sure, in any crisis, they will prioritize their own booming domestic industries first.
Now, to truly understand the devastating impact of China's move, we have to look beyond the headlines about which countries mine the most silver. Mining is only the first step. The real power, the real choke point in the 21st century supply chain lies in refining. And that's where the story gets really interesting. This chart says it all. China, by some estimates, controls a staggering 65% of the world's silver refining capacity. Let that sink in. Nearly 2/3 of all the raw silver ore pulled from the ground, from mines in Mexico, Peru, Poland, and everywhere else, has to flow through China to be turned into the usable metal that our industries need. This isn't just market leadership, it's market dominance. It creates a bottleneck of incredible strategic importance.
And let's be crystal clear on what refining is. It's the complex industrial process that takes impure raw silver ore and purifies it to the 99.9% standard, or 4 nines, that is required for virtually every modern application. A solar panel can't use raw ore. A circuit board in an F-35 fighter jet can't use raw ore. They need that highly purified metal. So it doesn't matter who digs the most dirt out of the ground. The country that controls the refining controls the entire world's supply of usable silver. They are the gatekeeper. So let's connect the dots. You have a market that was already in a multi-year deficit. You have stockpiles being drained to unsustainable levels. And now you have a geopolitical trigger where the world's dominant refiner has just seized control of the tab. When these forces collide, you don't just get price volatility, you get a fundamental, permanent repricing of the asset itself.
This is what I'm calling the geopolitical price lock. This isn't about the price spiking for a few weeks and then coming back down. It is a permanent structural shift that creates a new, much higher price floor for silver. Why? Because the central clearing mechanism for global supply has been captured. The free flow of metal has been compromised. The market is now forced to price in this massive new layer of geopolitical risk and physical scarcity. The old rules no longer apply.
Now, the logical question is, can't we just mine more silver to fix this? And the answer is a resounding no, at least not quickly. The supply of silver is what economists call highly inelastic, and this chart shows you exactly why. A full 70% of all newly mined silver is just a byproduct. It comes from mines that are primarily digging for copper, lead, or zinc. Silver is just a little extra they get. Mining companies are not going to spend billions of dollars in a decade of time to build a new copper mine just because the price of silver has gone up. The supply simply cannot respond to higher prices in the way that other commodities can.
And here is the other side of this perfect storm. At the exact moment that supply is being structurally constrained, industrial demand is exploding. And we're not talking about optional demand for things like jewelry. This is non-negotiable, must-have demand from the most critical, fastest-growing sectors of the global economy. You cannot build a solar panel without silver. You cannot build an EV without silver. The massive data centers that power artificial intelligence require silver. And of course, advanced defense electronics are completely dependent on it. This demand isn't going away, it's accelerating.
So where does this all lead? What is the escape valve for a market with inelastic supply and non-negotiable demand? The only answer is a much, much higher price. And we're already seeing forecasts begin to coalesce around a new consensus target. $100 an ounce is no longer some wild fantasy. It's being discussed by serious analysts as the price that would be required to cause what's known as demand destruction. That's an economic term for a price so high that it literally forces companies to cancel projects or find alternatives just to bring the market back into some semblance of a fragile balance. The market will have to destroy its own demand to survive.
Okay, so given everything we've just discussed, a structural deficit, a geopolitical choke point, and an inevitable repricing, the conversation has to shift. It's no longer about speculating on whether the price might go up. It's about risk management. The question for you is no longer if this new reality will impact your wealth, but how you choose to prepare for it.
So here's a simple 3-step framework for thinking through this. First, assess your exposure. If you run a business that uses silver, your risk is direct and obvious. But even if you don't, you have indirect risk. A huge spike in the price of silver will translate directly into higher costs for electronics, cars, and energy, fueling the very inflation that erodes your savings. Second, and this is key, secure your physical supply. In a world where availability is the main question, you need to understand the vast difference between a paper contract that promises you silver, like an ETF or a futures contract, and actually possessing the physical metal in your own hands. In a true supply squeeze, paper promises can break. Physical metal cannot. And third, plan for higher costs. Whether you're a business or an individual, you need to start stress testing your budgets and your portfolio for a new world where this critical commodity is significantly more expensive.
So let's just boil this all down to its essence. The facts are clear and they are unavoidable. We have a market with a pre-existing structural deficit that was already draining global stockpiles at an alarming rate. That weakness has been amplified by deliberate geopolitical actions, with the world's dominant refiner now holding the power to control the flow of metal. This isn't a theory. This isn't speculation. This has created an entirely new paradigm for silver.
And that really leaves us with one final, sobering question. With the policy deadlines on the calendar and the market mechanisms for control now in place, it's no longer a matter of if a global silver squeeze is coming. All the pieces are on the board. The game is in motion. The only question left for us to answer is, how severe will it be? I hope this breakdown has given you a clearer picture of the powerful forces at play in the silver market. It's a complex situation, but understanding these dynamics is the first step toward making informed decisions to protect yourself. If you got value from this analysis, please do us a favor and hit the like button, share it with someone you think needs to hear this, and be sure to subscribe to the Bullion Signal podcast for more content like this. Your support helps us continue to bring these critical insights to light. As always, remember that this content is for informational and educational purposes only. It is not financial and investment advice. You should always conduct your own research and consult with a professional before making any investment decisions. Thank you for listening, and we'll see you in the next episode.